Today, I'm going to be doing a deep dive into Orca, one of the largest concentrated liquidity decentralized exchanges on the Solana network. We're going to do a full crash course, basically going over from start to finish how I discover, how I simulate, as well as how I actually track and rebalance my Orca liquidity pools. Let's hop in. Now, for the majority of this video, we are going to be using Metrix Finance simply due to the fact that we believe that this is the best liquidity pool tool out there. And a lot of the stuff that we're going to discuss in relation to Orca is going to be applied to a lot of other decentralized exchanges, similar to some of the concepts that we use for Uniswap, as well as PancakeSwap and other decentralized exchanges can be applied to Orca. But if you guys don't know what Orca is, essentially it's a concentrated liquidity exchange on the Solana network, as I mentioned earlier. But what does that exactly mean? That means that you can head over to their exchange, you can swap one asset for another asset. That means that we can sell our SOL for USDC, or maybe buy SOL with USDC basically. And we can do that with other assets as well. We could sell Radium for SOL, or we could sell Orca token for SOL, or Render token for SOL, or maybe SOL for Pyth, or something along those lines. We can just execute all of these different trades, and it's going to route us through an automated market maker liquidity pool. Now, over on the Orca website, if you head over to liquidity, this is going to take you to V1 Orca, which means you're going to see a screen somewhat like this, and it's not going to be completely optimized. There is a V2 version of this. It is actually not really well known. If you just simply replace the V1 in the URL with nothing, so orca.so/liquidity, it will take you over to V2. Now, for this video, I'm going to be using V1, as well as I'm also going to be using Metrix Finance pretty heavily, so we'll head over there. Now, off the bat, we're going to see a list of liquidity pools sorted by their trading volume. We can choose to project this 24-hour yield over 365 days if we wish to do so. I personally like looking at big numbers and numbers over the course of a 1-year period, as opposed to a 24-hour period. So I'm going to use 365 days. But the thing is, this is just showing us the average APR, and even then, it does only use 24 hours worth of data. It does not use 7 days or 30 days, only 24 hours basically. So that's where Metrix Finance is going to come into play. And from here, I can just identify some pools that I think are solid, like this SOL to USDC one is very, very good. Same thing with SOL to USDT. But I also see stuff like Jupe to SOL that seems to have a good yield, Pups to SOL. And if we go down, we see WIF to SOL, JTO to GTO SOL, and then some other assets. So instead of completely relying on this, I am going to head over to Metrix Finance. But if we do see some pools right here on this liquidity section, we could just head right over to the simulation page on Metrix Finance. And we're going to dive into this a little bit later on. It's just, I do want to show you how exactly to discover pools on Orca, but using Metrix. And if you guys don't know, Metrix is an aggregator for all your liquidity pool needs, basically. That means that it's going to bring in analytics from Uniswap, PancakeSwap, SushiSwap, Orca, as well as Radium on all the different networks that these exchanges are on. Ultimately, the overall goal is to be able to see all this data in one central dashboard, identify the best opportunities, but also go and do a deep dive into those liquidity pools and discover some information that you might not know just by looking over at their website. So I'm going to head over to Orca on the Solana network, and then from here, what I like to sort by is not TVL, it's not average volume over the past 24 hours. It is actually the fee to TVL ratio, basically. I'm looking at stuff that has high fees compared to the overall TVL of the pool. Like, for example, this pool has $400,000 in TVL, yet its average daily fees is roughly $30,000. That is much better than something that has roughly $2 million in TVL, but its average daily fees is 20 bucks. You know, so obviously we want to go and look at stuff that has that high fee to TVL ratio. Now, off the bat, what I am going to say is some of these are going to be meme coins. Right now, there's a lot of meme coins blowing up over on the Solana network. I personally do not like to invest heavily into meme coins, mainly due to the fact that I do feel like they end up declining over time. What I do like to invest into is high utility assets, or assets that have a use case in decentralized finance and are going to grow as their platforms grow. So one of them could be Wormhole token. As the Wormhole ecosystem grows, I expect the Wormhole token to grow, so maybe I want to deploy into that liquidity pool. But occasionally I will take some risk, hop into some super high yielding liquidity pools just with a couple $1,000s just to see what exactly is going to happen. And sometimes I'll make some good money, other times I'll lose a little bit. Overall, I do end up coming out on top, but yeah, that's why I like to invest into the high utility assets. So off the bat, I am going to favorite Wormhole. I'm going to favorite this Nub one. I'm also going to favorite this Zeus one. And ideally, what you would be doing is also cross-referencing over on CoinGecko what exactly these assets are. So that way you can learn more about the assets as you're kind of going down this list. There's also stuff like SOL to USDC, which isn't a bad opportunity whatsoever, so do keep that in mind. And there's also going to be stuff like SOL to USDT or SOL to chat. Chat is SOL chat basically, and this has a pretty big use case actually on the Solana network, so that's one that I'm going to want to favorite as well. There's Neon to SOL. Neon has a use case. There's SOL to JTO. Obviously, there's a use case behind JTO token. It's one of the largest liquid staking platforms on the Solana network. Another thing I want to go and mention is there's more SOL to USDT pools. Even though we already looked at those SOL to USDT pools, there's more of them. So I'm going to show you a little trick to actually finding the the best possible one in a little bit. I'm gonna go ahead and favorite like Sol to NOS as well as Jupe to USDC, and now I got like 11 different pools here. I'm probably gonna stop there, but ideally I could keep on going down that list, do like hours and hours of research, but I do want to keep it relatively simple. So now that we've kind of looked at Sol USDT, Sol USDC, as well as more Sol USDC pools, I want to determine what's going to give me the best possible return. So I'm going to head over to Simulate, and from there, I'm going to go to this pair section. And once I'm on this pair, I'm going to select Orca, and I'm going to look specifically at the Solana network. Now, if I wanted to reference Radium liquidity pools as well to determine if it's a better return over on Radium, which is also an exchange in the Solana network, I can select Radium. In this scenario, I just want to look specifically at Orca pools, so I'm going to select Orca, Solana, and then from there, I'm going to type Sol as well as USDC. What this is going to show me is all the Solana to USDC pools over on Orca Solana network. And as you can see, there's the 0.04% tier, which is showing 72% APR, and then the 0.05% tier, which is showing 218% APR. This one has 8 million TVL, 30K in fees. This one has 4 million TVL, but 4K in fees. So already off the bat, this 0.04% tier has more liquidity, more fees, and its fee to TVL ratio is a lot better. So what I want to look at is both these positions side by side. So I could go ahead and pull up the simulate pair page, and you're going to notice that over here on this Sol to USDC on the 0.05% tier, the one that's showing a substantially higher return, well, there's a ton of liquidity over here, but there's not a lot of liquidity over here. So if the price of Sol goes up to like $200 or so, we're getting into a period where we have a ton of liquidity. Whereas if the price of Sol stays where it's currently at, which is pretty reasonable to expect, we could get a pretty high return right now. So I would probably actually want to deploy into this 0.05% tier, even though the ratio isn't as good and it doesn't have as large of a TVL or as many fees. It's just because the liquidity distribution is kind of out of whack on this one compared to this one over here. We're at the top of the liquidity distribution. But that's not all. We only looked at the USDC ones. Ideally, we could go over here and just search for USDT, or we can click this button right here, similar assets. What it's going to do is it's going to show us derivatives of these different assets. So not only are we going to look at Sol to USDC, we can also look at Sol to USDT right in one dashboard. And we can see that this Sol to USDT pool, which is on a lower fee tier, actually has a 260% APR compared to a 218% APR. So opening this one up over here, we could double check the liquidity distribution. We are near the very top of the liquidity distribution, which is great. And as you can see, volume has declined a little bit over the past couple weeks. So what I'm going to do is I'm going to narrow down that calculation range. I'm going to look at 1 day and see, hey, it's only 3% APR over the past day. 2 days is 60%, 3 days is 100%, and 4 days is 110%. So realistically, this does not look nearly as consistent as that other one that is doing 220% APR. So I am going to end up going with this 220% APR one. Now, obviously, I'm not done. I'm not just going to deploy into one concentrated liquidity pool. What I am going to do is pull up the Metrix Finance compare feature. Now, this is going to allow us to compare multiple liquidity pools against each other. In this scenario, I'm actually using this as a way to save different liquidity pools because we're currently working on like a feature where you can just favorite specific simulations, as well as we're working on a portfolio builder where you can kind of build out multiple simulations and see the overall return for a portfolio. So it'll be interesting to see that stuff, but for now, I'm just going to save it over here. We're going to look specifically at that 0.05% tier one because that's the one that's doing the high APR basically. We're just going to add it to this compare tool, and later on we'll dive into the ranges. Next thing I want to look at are some of these other liquidity pools that I favorited. Now that I've kind of looked at Sol to USDT as well as the USDC ones, I'm just going to unfavorite these ones from my Discover page and keep on looking. We got Jupe to USDC. Let's go ahead and open this guy up over here. And then from here, we're going to be able to look at some of the information. Number one, the price is at the very top of the liquidity distribution. Number two, volume has actually done pretty good recently. So we're going to keep that in mind, and I'm probably going to use a calculation range of 7 days or so. And from there, that shows that I'm doing about 175% APR. The reason why I'm adjusting my calculation range is because I want to use the most recent data. And that most recent data is consistent, as you can see, as opposed to it being 30 days. As you can see, it's kind of inconsistent. At the beginning of the month, we weren't doing as good, then we did really good, and now we're not doing as good. So I want to use that recent data to get a more accurate estimate. That one's about 175%. Jupe USDC is looking very, very tempting. I'm going to go ahead and add that over to my compare tool as well, just so I have it saved and I know, hey, I want to come back to this pair. This one is going to be on the 0.04% fee tier. Just going to add that in here. And now we can compare Sol USDC versus Jupe USDC, but we also just have them saved here. So when we start to build out the overall portfolio, we can go ahead and reference these ones over here. I'm going to go ahead and unfavorite that one. And like before I go any further, obviously I want to make sure that Jupe has been doing pretty decent recently. And as you can see, it's up 12% on the day. If we look at the past 7 days, it's done really good. If we look at the past month, it hasn't done as good. But what we also have to keep in mind is that the overall crypto market did see a pretty harsh month, basically. Since the beginning of April, Sol was going going down, Matic was going down, Bitcoin was going down, ETH was going down, all the altcoins were completely tanking. So let's keep that in mind here. And as long as it's correlated with the overall market or outperforming the market, that's great. Now, if it was underperforming the market, that's where I probably don't want to invest into it, basically. Now, I'm going to do that same exact thing for NOS because, well, I'm not too familiar with NOS. So we're going to look at Solana. And as you can see, that's up 3.5% on the day. Over the past month, it actually started declining before some of the other assets. It went from $5.57 to a bottom of roughly $2.90. Now it's sitting a little above $4 at around $4.30. And if we zoom out, look at 3 months, we could see it is down from its previous 3-month high. Look at 1 year, that 3-month high is actually its all-time high, and that all-time high was $7.33. So it does look like we are starting to go up again. We're seeing a pretty good incline in price, and it looks pretty healthy. Over the past 14 days, we're up 30%, 7 days up 24%, and 24 hours roughly 3.6%. So this Solana is one that I definitely want to include in my portfolio because it looks like it's starting to gain some traction. Obviously, I need to be responsible and do some actual due diligence on the asset to make sure it's something I want to include in my portfolio. But from there, we're going to go ahead and look at some SOL to NOS pools over here. Just pull it up on our pair feature. And as you can see, there is only one SOL NOS pool that is, relatively high TVL. So we're going to pull that one up. Once again, do our basic due diligence on this. Like, okay, we're at that top of liquidity distribution. Volume is actually consistent over the past 30 days, so I'm happy with that. And we're doing a 225% APR. So let's go and add it to the compare tool. Let's just add SOL Solana over here. And that, once again, was on the 0.3% tier. Just like that. And as you can see, there's actually like some other fee tiers that have some liquidity. Like this one has some liquidity, but it's only going to be a couple $100. Same exact thing with this 2%. And this one, the 1% tier that actually has 1% of the liquidity, it's not showing on pair because it doesn't meet the requirements. It doesn't have above 5% overall liquidity, basically. So it's not really worth factoring in because the returns on there are not going to be good whatsoever. So we're just going to add in 0.3% here. That way we have it saved. Now, I do want to show you an example of something that I'm not going to invest into. So let's go ahead and find one of those. Looking over at Zeus, it looks like that's done pretty decent over the past month. I'm also going to look over at Neon, which is another one that's on our list. And if we look at that over the past month, hasn't done nearly as hot. It's actually gone down from about $1.80 all the way down to nearly $1. So let's just say we didn't want to include this on our list. One thing that we could do is start to do some due diligence on it. We'd hit simulate as per usual. And from here, we can look at overall liquidity distribution. We can look at volume. As you can see, there's this one day that had super high volume and the rest of the volume has just been declining. The reason why I would not want to invest into this is number one, it's gone down over the past month and it doesn't look like it's stopping. And number two, well, that volume is not consistent. One day it traded $2 million in volume. And the next day it did $225,000. And then some days it did roughly $60K in volume, or over here roughly $40K in volume. So we just got to keep that in mind and probably not deploy our capital into it because that volume is just not consistent whatsoever. Yeah, it looks like a high yield, but well, that high yield is factoring in the day that we did really good. If we use that 7-day calculation range, that yield gets cut in half. It's still 260%, but again, that asset's declining, so I just don't want to invest into that. But assuming I've kind of gone through that process of looking at different liquidity pools and actually going through doing that initial simulation, what I am going to go ahead and do is just head on over to our compare feature where we have all those pools saved. And from there, I want to start to determine number one, range of these liquidity pools, number two, the proper calculation range to use, and then of course, number three, if I want to deploy into them or not, right? And typically I like to have 3 to 5 pools in my portfolio. I don't like to be allocated on one exchange solely. So if I'm wanting to have maybe 30K of my capital on the Solana network, I might do 15K on Radium and 15K on Orca, right? That's typically the principle that I apply. But I'm going to go ahead and pull up this SOL to USDC pool by clicking simulate position. And then from there, we're going to start to determine our range. So in terms of like what we're going to do with our range, we want to look at how many USDC equals 1 SOL, first of all. And then number two, we want to look at performance. So over the past 30 days, SOL has been seeing a pretty decent decline. Recently, it looks like it's starting to pick up. We're not sure if that's going to stay consistent. We could zoom out, look at kind of a longer period of time. 60 days, it saw its run, it consolidated, and then it started going down. It's like 60-day low was roughly $100, and our more recent, like 14-day low or so, is going to be roughly $120. So obviously, we're probably not going to go below $100. We could say that reasonably, at least for the foreseeable future. So maybe we want to set our bottom price at around $105, right? That's below our low of roughly 120, but we also want to allow some room in the case scenario that we do continue to retrace. I'm going to zoom back into 30 days. From there, what I'm looking at is asset ratio. Typically in these like USDC crypto pairs, I want to have like 50% at least of my money in SOL. And that's if I'm like somewhat bullish. If I'm really bullish, I'm going to want to have like 70% of my capital in Sol, the cryptocurrency, as opposed to the stablecoin, because we don't want to take on exposure to a stablecoin when the overall market's going up, basically. So I'm going to drag that max price out over here to something like 215. As you can see, that gets me to 50-50, but even then, 215 is a ways away. So next best thing that I could do is bring up that min price to something like 115, basically. That gets me to roughly 56% Sol, and then I can bring that up to like 235. That gets me to 60% Sol. That still keeps me at a 160% APR. We look at the volume history. As you can see, more recently, volume hasn't been as hot, so let's go ahead and just use the more recent volume. It's roughly 7 days. That's more consistent. That's getting me 130%. So now we found our range, 115 to 235. The next thing I'm going to do is head back over to the simulate page, and then I'm going to go to this pair functionality that we used earlier. And now I'm going to confirm, now that I have a range, that this is the best possible pool for sold to USDC. Now, if I want to look specifically at Orca, I'm only going to select Orca. In this scenario, I want to kind of determine what has the best return. So I'm going to be on Orca as well as Radium. So we're going to type in Sol, we're going to type in USDC. Our deposit amount, well, maybe I want to deposit like $15,000 here. My calculation range, remember we were using 7 days over here. Our range was 115 to 235. So for my range, I'm going to type in 115, 235. We're going to check that similar assets. That way we could look at the USDT ones as well. And we'll just wait for that to load. It'll take a couple seconds, maybe 10 to 15. It's going to show us the Radium pools as well as Orca pools and also all the different fee tiers. So as you can see, we literally got 7 different options right here to choose from. So first things first, this one, 96%. This one, 130%. That one's better than that one. We already know that off the bat. This one is 70. This one's 130. And this is actually the one that we were looking at. And if we look at this one over here on Radium, this one's 100%. This one's 80%. And then this one's 90%. So the best two are sold to USDT over on Radium, as well as sold to USDC over on Orca. Now, how exactly do I decide between the two? They have similar metrics. Both are collecting around 4K in fees, but one has $1 million in TVL. The other has $4 million in TVL. The reason why this one has $4 million in TVL is because this person's got a huge chunk of liquidity over here. But other than that, very, very similar metrics. So let's keep that in mind. What I would do as the deciding factor is, remember, going back to the diversification. If I'm allocating half to Orca and half to Radium, then the deciding factor isn't really going to be the APR, considering these APRs are very similar. The deciding factor will be what other positions are going to be on Orca compared to Radium. So if maybe one of these positions over here, like USDC Jupe or NOS Sol, is doing better on Orca, then I'm going to want to have these ones on Orca, and I'm going to want to have these sold to USDC over on Radium. Whereas if it's vice versa, I just want to have sold USDC on Orca and then the other two on Radium. That goes back to diversification. You don't have to do it that way, but that's just kind of my personal preference, making sure I'm diversified across exchanges in case there is an exploit, basically. But going back to it, let's just say we were to deploy this one Orca, because remember, this is the Orca crash course. We'll create a Radium crash course. What I want to go ahead and do is actually grab that information, right? So Sol USDC, this is the one that we added, that we were initially looking at on our compare tool. Now we want to go ahead and just adjust the numbers so that way we have them saved. So maybe we're deploying $15,000. We have the 7-day calculation range. Our min price is 115 and our max price is 235. Just like that, this is the position that we are looking at. We want to keep this one here, and then we want to start to focus on another position, like Jupe USDC, basically. We're going to repeat that same exact process that we just did for Sol USDC. We're going to open up Jupe to USDC, basically, and we're going to look at liquidity distribution. We're at that top. We're going to go down here, look at volume history. Volume's pretty consistent, except recently it has actually seen a little bit of a decline. Maybe I want to use a 5-day calculation range here. And then we'll start to find our actual range. So I'm going to look at how many USDC equal 1 Jupe. From here, I can say, okay, my top price, probably want to have that near the 30-day high. My bottom price near the 30-day low. And then I want to add some buffer room, right? I want to bring that down. So maybe we do 0.8 or 0.7 is probably more reasonable. As you can see, our bottom was 85 cents. And then we could bring that max price up to fit that overall ratio of the assets. If we bring that up to roughly $2, yeah, that's pretty high, but at the same exact time, it gives us 50-50, and then we could bring that min price up to kind of accommodate and get us to about 55% Jupe, basically. So like 0.8 is what I'm going to do. It's a little bit less than our previous low over here. Relatively bullish approach on this pool, but I'm pretty happy with it. Let's say we did 0.8 to 2. We're going to head over to pair. Once again, we're going to determine if it's better to be on Orca or Radium, so that is going to be Jupe to USDC, basically. And we're going to be on Orca as well as Radium on this. My deposit, let's just assume a $10,000 deposit, and let's assume a calculation range of 5 days. We're going to throw in our range, which once again is 0.8 to 2, basically. And as you can see, it's just best to be over on Orca because there's no pools over on Radium that are worth deploying into, basically. And this is the best possible one. So we're going to go ahead and put this information over in our compare tool. So remember, we are going to be using the 5-day calculation range. We are going to be looking at how many USDC equal 1 jupe. Our range is going to be 0.8 to 2, basically, just like that. And then as you can see, we're going to be using a $10,000 deposit. That gets us 91% APR. I'm pretty happy with that off a 10K deposit, making 25 bucks a day. And now that we have like 2 pools here, let's assume that's our portfolio, right? What we can do is we can easily look, hey, 15K here, 10K here, that is $25,000, right? And this one's making 53 bucks a day. This one's making 25 bucks a day, which logically means that we are making $78 per day. That's pretty good, right? And then ideally we would add in our other positions. Like we have Nas Sol over here, and assuming we had like a $5,000 deposit in here, and maybe we were making 30 bucks a day, then we can already say we're making 108 bucks per day now. So that's exactly how we would kind of find the pools. And after I'm ready to deploy into a pool, what I would actually do is open up the simulation page, kind of like this. Just hit create position. It's going to take you right over to the platform to create that position. We're going to select the custom, obviously, for the pool, and then we're going to enter our range over here. So that's going to be 0.8 to 2, and that's actually going to show you the 24-hour but annualized yield, which is right in line with what we simulated over on Metrix Finance, which means that this is going to be pretty consistent. But what this yield won't show is in the scenario that there is super high volume one day, it might show like 200%, but when you drag it out and you look over at the long-term data, it might actually be like 50%, or the next day might be 50%. So you don't want to rely strictly on that. That's why you want to use Metrix Finance, because it's going to allow you to select different data points and allow you to do a deeper analysis than just kind of typing in the information here and it's showing you a 365-day yield. But we'd hit next step, choose amount. I always like to click match deposit ratio. That essentially says, hey, you got this much of one token, this much of the other token. If you deploy both of them, we'll automatically execute the trade to get you that proper ratio. Because remember, our ratio is 57% jupe, 42.8% USDC. So in the scenario that I had some of these assets in my wallet, I would put like, okay, I want to deploy a total of like $10,000 into this pool. I would literally just type that down here, and then I would hit next step, and assuming I had USDC or jupe in my wallet, it would automatically go ahead and execute a trade to match the deposit ratio and let me get into that pool, basically. And then after I open up the pool, I can manage from the liquidity section over here on portfolio. Currently, Metrix Finance does not have any feature to track the positions, but we will be having features for tracking positions relatively soon, so do keep that in mind. But for the time being, I would just use a spreadsheet to track my positions and track how much I deployed, as well as how much I currently have, but also how many fees I have, and just kind of record on a day-to-day basis exactly how much money I'm actually making. Like, hey, this day I had $10 in fees, or my total fees was 10 bucks this day, and then my total fees the next day was 20. So that means I made $10 one day, $10 another day, and the next day it was 30, or the next day it was 35. So that means I made 15 bucks this day. That's the type of information I would be tracking. So that way I could look at it on a more long-term basis and see exactly how this position is performing, basically. I hope you guys did enjoy this video and this crash course on Orca. Remember, you can apply some of these principles to other decentralized exchanges, other networks, everything like that. Metrix Finance currently supports 2 exchanges on the Solana network, that is Orca as well as Radium. I will say for Orca, you do have to have the Pro plan, as well as Compare and Pair are going to be a part of the Pro plan. Whereas if you want to look over at Radium, Radium is completely free, but Compare as well as Pair are still 100% Pro features. But you can still do the simulation, the discovery, and all those other different things that I went over on Radium for free. And that's just because we worked with Radium on a grant, and unfortunately Orca did not accept our grant to implement them on our platform for free, basically. And if you guys do want to win a 1-year subscription to Metrix Pro, I do recommend you follow our X page, as well as drop a like and subscribe when notifications turned on here, so you never miss out on this content. But also over on our X page, we're always doing giveaways. Like right now, we're running a giveaway. A couple days ago, we also were running a giveaway, and those are still running right now. So if you're watching around April, then you might be able to participate in these giveaways. But also, we're always hosting them because we just want to have the best software out there and make sure that users are actually able to use it. I'll see you guys in the next video, and peace out.